Hey, it's Richard with Matthews Wealth Management here for May 2024, covering the Fed, right? The balance sheet and M2 money supply. So not a huge amount of difference. If you haven't watched one of these videos, again, this is the amount of currency that's been in the U.S. since the beginning of tracking in the 50s. And so here we are, not much changing. We have quite a bit actually going between here, but you can't see it because the curve is so smooth in this point. This was the Great Recession where we did TARP and bailed out all the banks and AIG and Bear Stearns, Lehman Brothers, all that garbage went down and we all freaked out. But this was COVID, in case you care. Like historically, this is unbelievable. But that's why I keep showing that. Let's zoom in. And so since COVID, we had all this money printing, all the PPP unemployment, downward trend. This was BTFP where banks like Silicon Valley were failing. And now we're just kind of in this little up and down wave, right? Until somebody figures stuff out. In fact, I think what's happening is that Congress is using what the Fed's doing on the balance sheet to keep this where it is. And so, again, that's just how we reallocate wealth. You know, if you're politically connected, you get the money. That's it. I said it out loud. All right. So what happened here? Currently, we're at $20,867,300,000,000 out there, which shrunk. Actually, that's wrong. It grew. Go figure, right? Everything's red. So we grew by 0.12. That's not terrible. I mean, it's not good, but historically we do tend to grow each month, each year, whatever. Not at the rates that we do in crisis time, but year to date we're up 0.5%. Last year, okay, well, most of that's been in this year. And if you recall, M2 was shrinking as the Fed was doing a good job selling off the balance sheet, and then Congress decided we're going to do what we want after the Republicans went ahead and did everything in June. So if you think that Republicans are fiscally conservative, you may want to vote again. Anyway, 1 year ago, 60 basis points. Since COVID, we're up 35.67%. Guess what inflation has been? Duh, this isn't rocket science. Okay, then let's look at the balance sheet, because this is what the Fed tries to do to offset what Congress is screwing up. And this is how much in terms of bonds and assets, it's basically bonds, that the Fed purchases, because for some reason the bank needs to buy stuff out of the economy that's bad because they can print money for bad stuff, which just means you pay for it inflation instead of a tax. It would be more obvious. Whatever. These politicians think you're stupid and don't understand this stuff. And maybe you don't, but you should, because this is just garbage. And the more you knew about it, then people would run properly and balance a budget. Who cares? But so this was the bailouts during TARP and all the fun stuff for the Great Recession. And then we had to keep the mortgages alive with additional purchases of mortgages from Fannie and Freddie. And then we tried to start raising rates, and quantitative tightening, or tapering is what we called it back then. And when that happened, market did some bad stuff. We had to bail out a bunch of banks about 3 months before COVID hit. And now we could just unlock the floodgates and let the Fed buy up everything and basically double the amount of stuff that they had on the books as we continued to just pay people not to work and blame it on supply chain. And then we had banks fail, and let me just zoom in. So that's where the banks failed. All that's the same thing, but this trajectory is pretty cool. It's good to see the Fed's actually doing what they're supposed to do. They're hitting their targets of how much they're trying to sell off. 1.6% this month is how much they were able to sell in bonds or let expire and then destroy that currency to hopefully keep M2 dropping. Unfortunately, it's not. Year to date, we've dropped 5% off of the balance sheet, 13% over the last year. That's a good trend. We need to continue that. It'd be cool if we can go faster, but that's kind of, you would really freak out the bond market and you'd see yields spike. And that's the problem, is yields versus rates. And so they're doing a good job. This is about the right rate that they can support. But we're still 74% over where we were, which was already way too much from 2008. So, you know, there's no way to really fix this, I guess. But if this goes back to zero, we're still in trouble. We probably need to go to negative 150%. That would be good, just to get us back down to only 1 trillion instead of 8 trillion. Well, 7.2 now, so that's good to see. All right, so let's talk about the difference here, because M2 grew by 25 billion, but the balance sheet shrunk by 118 billion. So that means that Congress spent 143 billion more than they brought in for the month of May, because they're voted to just spend new printed money. And again, they think you're not smart enough to realize that this is what drives inflation. This is deficit spending. Actually, all government spending causes inflation. It's easiest to read in M2 money supply. But the deficit spending is just like the worst kind of poison. So vote them all out. They're terrible. We'll see you at the end of June and probably say the same thing.